Hey there, welcome to the Guaranteed Retirement Guy Show. My name's John Stevenson, and today we're going to be talking about getting out of your annuity and not get burned. So if you have an annuity or you're thinking about purchasing an annuity and you're thinking about the restrictions and the limitations and the lack of liquidity, then I'm here to answer your questions. So if you're looking for the highest paying annuity for either income or growth, I'd love to help you with that. Definitely not obligated if you don't, if I don't try to sell anything to people. I just want people to be able to see all their options. And then if they're looking to purchase, of course, I'd love to help you. There is a link below this video. You can go directly to my calendar, or you can go to my website, johnstevenson.com, and you can search for annuities and you can use my calculators. And then if you want to, you can reach out to me. So it's totally up to you. But I just want to make sure that you have everything at your fingertips, and then I am being as transparent as possible. Okay. So, but let's talk about not getting burned. Okay. Because if you are thinking about purchasing an annuity and you want to get out, there are annuities that allow you to get out. But you have to see, sometimes you won't lose any money and sometimes you will. Okay. So let's just look at this. Okay. I'm going to share my screen. I want you to, let's just dive in this together, and hopefully this will give you some clarity. Okay, so what I did is I just threw someone in who was married. They're both 62. They live in Idaho, and they've got $600,000. Okay, and they're thinking, hey, we want to purchase an annuity, and we want to take income in 5 years. So what happens? So obviously the income is good. It's $62,000 a year. That's guaranteed, which is great. But what happens if they want to get out? Okay, so just on all of these, just a disclaimer for pretty much all annuities, most of them will have a 30-day free look period or a 10 or a 15-day. Okay, but it's most common to be a 30-day free look, which means if you purchase an annuity, they deliver the contract to you, or your agent delivers the contract to you, and then you have 30 days to take a look at it. And if you don't like it within that 30 days, just cancel it and get all your money back. And I have had people do this, and they did get all their money back within 2 weeks. So just so you know, I mean, you can get your money back, and you will, and you won't be charged anything. Now, after that, you are subject to a surrender charge period, and I'm going to show you what those numbers look like. Now, whenever you purchase an annuity, you always want to make sure you have plenty of savings outside of it, plenty of liquid assets, because when you're purchasing an annuity, you're purchasing the contract, you're purchasing the benefits, and you're doing it with the intention of not canceling it. And so if you don't cancel it, then the surrender charges will never affect you. Okay, and that's why it's just always important when you purchase these annuities, make sure you do your due diligence, make sure you do your research so that when you do purchase it, you know that you're getting the best one. You're not wondering, you're hoping that your agent's giving you the best. You know because you've done your research. That's why I have my annuity calculators there for you so that you can research and know for yourself instead of having to take my word or anybody else's word for it. Okay, so let's take a look at this as far as surrender charges. So the account value, let's see here, projected to grow, and they're only giving you 6% of the S&P. So actually, you know what? Let me go up here. Yeah, they are. So their cap is 6%, 6.05. So if you look at that and the S&P continues to do what it does, then your account value will grow to like 628. Not huge, because look at the rider charges. They're paying, you are paying some decent rider charges here. But if you're doing it for income, it doesn't matter, because the rider charges will only last for as long as the account value, and then they're gone. So yeah, you are paying a lot of rider charges, right? If you look at the number of years, like 15 years, you're probably paying, I don't know, like $200,000 in fees. You're like, wow, that's a lot. Yeah, I know. But the income's a lot higher than without the fee. You can do one without the fee, and your income would be like half of this, or a little bit more than half. So probably, I don't know, 35 to 40,000 maybe. So you're trading $200,000 in fees, but you're probably going to get, I don't know, the total lifetime income on this is 1.8. So you're probably total income on something without a fee is like $1 million. So you're trading 200,000 in fees for an extra 600,000 net income. Okay. So it just depends on what you're looking for on these. So it just, I don't want to dive too far into that, but I just wanted you to kind of see how that worked. So if we go up back into, let's see here, cash surrender value. So let's say the year before you decide to take income, you decide to cancel it. Okay. It's worth $628,000. Okay. Let's say you decide you want to cancel it right then. Well, you're not going to get 628. You're going to get like 617. You see, that's the difference, because they're charging you these surrender charges right down here. You can see the surrender charge schedule right here. Okay, it goes down over time. But yeah, if you got 500 grand in there and you charge 5% to get it out, then that's 25 grand. So just depends on, if you feel like you're going to cancel it, then probably don't buy it. But if you know you're going to do it for lifetime income, then it's a no-brainer. Okay, let's go back over and we'll take a look at the MYGAs. Those are interesting right now. The rates are pretty good. But I'll show you the costs of getting out of those. Now, again, the MYGAs, just like the fixed index annuities, they usually have a 30-day period where you can take a look. And if you don't like it, then you can cancel it, get your money back. But let's see here. Let's look at a 7-year. 7-year Liberty Bankers paying 5.1. All right. So here's the earnings. This, if you let it compound, you're gonna have $249,000 worth of growth, and your ending balance is $849,905. If you were to surrender it, you see the surrender charges right here. They go down over time, but you can see it gets to like after 2 years, you're at your you're above break even. Okay, you definitely don't want to get out because you got a lot in there. Okay, so anyways, you let this grow over time, it's going to be pretty sizable. So even 769, obviously at the end of 5 years, you're like, well, I got $769,000 now. If I take it all out, I'm going to pay a hefty surrender charge, but I'll get my 735. So you're definitely well above where you started. So there is a cost. That's I guess how you could say you get burned, right? You get burned if you get burned if you cancel it too early, okay? And you can replace annuities, and I have replaced annuities where people got burned, right? Like 8, 9, 10%. But I had to put them into a bonus product that paid at least 10% to cover that burn, okay, to cover that loss. And so, and for them, it made sense. They were doing it for highest lifetime income. They were in bad products that were not paying them as much, and that's what they wanted. So it was perfect. When you're looking for highest income, you need a bonus to cover that burn, to cover that loss. It's not the greatest for growth, but you're not doing it for that. You're doing it for income, and that's when it makes sense. So, all right. Just wanted to kind of point some of this out to you because people do get worried when they put their money into these contracts. They're like, how am I going to lose money? They're going to totally screw me over. They're going to take my money or whatever. Here's the thing you have to realize with these insurance companies. They're trying not to lose money. They're trying to make money. And if you take your money out too soon, they're going to lose money. Okay, they're in long-term investments when they use your money to grow. Okay, you got long-term bonds. Okay, you've got market value adjustments, which, if the interest rate environment changes quite a bit, the value of the underlying bond can go down, and that causes them to lose money. So they pass on those charges to you if you take it out too early. That's why you just have to realize when you purchase these, first, do your research. Like, go to my website and check out what's available, and then you know that you're buying the best annuity for yourself. And then, of course, make sure you have plenty of liquid assets outside of this so that the chance of you having to go in and cancel this is very, very low. That way, you never get burned, okay? Or at least your chances of that is very, very low. So anyways, what I'm trying to do is just share as much as I can so that as you search for annuities and you're looking for either growth or you're looking for income, whatever you're looking for, and you're trying to protect yourself from getting burned, from getting taken advantage of, it's good to go into this eyes wide open and know exactly what you're looking for and knowing exactly what the risks are, right? If you cancel, you know exactly what the cost would be. So anyways, I like being transparent. I want to be treated that way. And for me, it's really important when you're looking to invest a sizable sum of your retirement funds that you can see everything that's available. So I hope that you see that. And hopefully as you go through my website, you'll be able to find what you're looking for. And if you're looking to purchase an annuity with me, I'd love to help you. Okay. Won't try to hard sell you, but if you are looking to purchase and use me as your advisor, absolutely, I'd love to help you set it up. So there is a link, of course, below this video. If you want to go to my calendar, we'll get on a Zoom call. Otherwise, you can book a call directly on my website as well, and it'll send you the same link. So anyways, if you like the video, make sure you like, subscribe, share, comment below if you got questions. I'm happy to help. And thank you so much for watching, and we'll see you next time.